What's up everybody, welcome to my channel. My name is Andrei and within the next several minutes I will tell you my thoughts on potential delisting Chinese companies from American stock exchanges. So stay tuned. Alright, welcome back to the channel. US President Donald Trump signed into law on Friday the Holding Foreign Companies Accountable Act, which will remove Chinese companies from American stock exchanges if they fail to comply with US auditing oversight rules within 3 years. Before I share my thoughts on this situation, please hit the like button and subscribe button with notification bell. In this case, you won't miss the next video. Now, let's get started. In my short video several days ago, I told you this act wouldn't affect Chinese or any other companies. Basically, this bill requires that companies either certify that they are not foreign-owned or they allow audits by companies that are certified with the PCAOB. The PCAOB is a non-profit corporation established by Congress to oversee the audits of public companies in order to protect investors and further the public interest in the preparation of informative, accurate and independent audit reports. According to the most recent congressional report by the US-China Economic and Security Review Commission, as of October 2nd, 217 Chinese firms with a combined market capitalization of $2.2 trillion were listed on the major US stock exchanges. It is a large slice of a total US market pie. On the other hand, Chinese companies listed in the United States have been embroiled in the financial scandals in the past, including Luckin Coffee this year, which led to a Nasdaq delisting. 16 Chinese companies have delisted since February 2019, according to a government report in October. But will this act prevent situations like this in the future? Well, let me give you one example. A quick Google search shows us that Luckin Coffee's auditors was Ernst & Young, and it is certified by PCAOB. Wait a minute, and what about Kandi Motors? It is another Chinese company delisted from US stock exchanges. Their stock sold off 32% after Hindenburg Research accused the company of faking sales to raise $160 million from US investors. Kandi also uses a PCAOB registered auditor. In this case, it was a Marcum, Bernstein and Pinchuk LLP. I don't want to dive deep into this situation and don't want to investigate why PCAOB approved auditors don't do their work as they should do. It is what it is.
But Andrei, you've told us that this bill won't affect Chinese companies and us as their investors.
Yes, it won't affect you. Let me clarify a little bit. According to stockanalysis.com, almost 300 companies have been delisted from American stock exchanges in 2020. Some have gone bankrupt, some have been acquired, others have been delisted for other reasons. There is always a risk to invest in stocks. Sometimes it is a little bit higher, sometimes a little bit lower, but you have to be cautious all the time. Luckin Coffee and Kandi Motors tried to cheat, and it is the main reason for delisting these companies. Chinese firms probably won't be delisted, and here are two main points. First one, firms have 3 years to comply, which is a lot of time. Mark Yeki, former head of Asia-Pacific listings at the New York Stock Exchange, said, "The 3-year grace period indicates that Congress is willing to give Chinese companies and their auditors not once, not twice, but 3 chances to comply." And the second reason is Mr. Joe Biden. Biden has chosen an experienced foreign policy team with many members known for their pragmatism. Biden's take in office will mark the end of an era of irrational US policy towards China, and he has to do his best to get ties quickly back on track. If you are still afraid of investing in Chinese companies, here's my advice to you. First of all, and the most obvious thing, don't invest in foreign companies. Yes, as simple as that. Why you should invest in a company which has a higher risk than others? it doesn't make sense. And the second one, if you want to invest in Chinese companies, just diversify your portfolio. I mean it. If you have 5 or 10% of a given investment in Chinese companies, then the worst case scenario, you will lose only 10% of your capital. Is it good? Not at all. But it is much better than to lose it all. With that being said, please subscribe to my channel if you haven't done this before and hit the like button. See you next time!